makes a change from Policeman's in Grosvenor Street. Some people remember that. Right, okay, here we are from the sort of sun-kissed beaches of Leith, central Edinburgh, the joys of Jersey, and of course for those of us in central London. Welcome everybody. It may be called 7, but I think we've got a little bit bigger than that now. So you're welcome to not just this, but also the party tonight. We're all going to have some damn good time. So, quick staff briefing tonight to go through the key issues we all need to know about what's going on. This, remember though, it has to be in terms of the sheer basis of this business, the reason why we're actually doing it in the first place. We set this business up because there were a lot of things wrong that we didn't like. And lots of work for large corporations, we didn't like that either. And we don't want to become a large corporation. So this issue of culture is still really important to us. We don't get it right the whole time, of course we don't. We strive to get it right, and then we lose this, then you end up become a large corporation. So doing the right thing, look, that's what what's happening with our own money, isn't it? That's what we need to have happen. Long-term investing, we're not short-term punters. Those of us who go around the country still have to do with those dodgy stockbrokers trying to pick the stock of the day. Oh well. Clear and transparent, yes, honest, very straightforward, cost-conscious, great service. All the things we want to do for ourselves. And good IT. That's why Phil's here, and the team. To actually make sure we get all that. And constantly trying to innovate. Trying to day you're not innovating is the day you're going backwards and other people are overtaking us. We all know that the whole time, don't we? So this is all down to not some great corporate structure telling it's down to us. It's our business, and our business is trying to actually make sure it works properly. So this culture is really important to us. If people don't like that sort of culture, it's very simple, they can go elsewhere. And Kate has managed to do that. So that's what we have to try and do. Actually, we get, surprisingly, we go through the years. Awards, you know what this industry is like. You get an award by buying a table at a dinner, death by lukewarm lamb chop. Actually, we've got awards where you don't do that. Actually, proper awards where you get awarded for actually doing some really rather good things, recognised by the industry and recognised externally as well. There's a whole list of them here, I'm not going to go through them all. But in terms of the 5-star service, in terms of retirement proposition, best multi-manager in terms of its structure, goal-based investment system, FinTech awards, a FinTech award. We're not supposed to be in FinTech, are we? Well, yes, we actually probably are. And in terms of innovation, one of the key elements. And of course, those 5-star de facto ones, which are crucial because people look at that and you see that as a key measurement. How do we get that? We get that because of the way we all work. It's down to us actually doing it. Not by buying tickets for a lukewarm lamb chop at a dinner. And that's really important. And look at that, that's all 2018. Not all the ones we've done in the years before. So I think that's actually really very impressive indeed. So the question is then, actually, well, what happens next? So, Tom, what's the plan?
Thank you, Justin. We spent a lot of time with the management committee this year trying to take a complex world and to make it simple and understandable. To take our propositions and make them simple and understandable to our customers and indeed to the team. So the plan for 7IM should be one that everybody can get in a sentence or maybe two. So our challenge is to take all the things that we're doing and to try to distill that down to something which is very simple, very understandable, makes sense, and more importantly, we all feel very comfortable that we can do it. So to illustrate the plan, so the plan is not the numbers, but to illustrate the plan, what I'd like to draw your attention to is that this year, about half of our profits come from funds and models. And funds and models, as you know, has become a much more competitive business in the IFA market over the last couple of years. We've had more innovation from our competitors, we have price competition, and I think as we mentioned in the last couple of meetings that we've had, the number of fund manager competitors has tripled. And in addition to that, the IFAs themselves are becoming fund managers. So as our largest distributors themselves become fund managers, we don't believe that it's prudent to bet the entire future of the business on that component. So what we are looking to do is we're trying to take discretionary which is 32% of the profit now, and grow it from 6 to 8.5 million of profit. We're trying to take platform, which is 6% of the profit right now, and take it up to close to 20% of the profit. And we're trying to take direct, which is 16% of the profit, up to 25% of the profit. So if you look at these numbers here, which is where I'm focused, in 5 years' time, rather than have a business that's dependent upon one stool, we have a business, a chair, if you will, that has all 4 legs that are strong. And that is the business plan for the next 5 years. That is what we're trying to do. In order to do that, you'll notice, or you may notice, that discretionary and platform and direct all require closer relationships with the end customer. So we are very, very much going in the direction of being a relationship-driven business. And if you look at the inflows and the outflows, you can see that if we're able to establish a relationship with our client, whether it's an IFA for discretionary, or whether it's an IFA for platform, or whether it's direct business for discretionary, we see that the average case sizes are higher. We see that the number of accounts per practice, if it's in the IFA world, gets to be bigger. And most importantly, the assets are stickier. They stay with us for a long period of time. That the attrition rates in the discretionary and the platform business, they all run about 10%. And if you think about an attrition rate of 10%, that includes all monies going out for regular payments. And in a society where our primary clients are hitting retirement age and starting to go into drawdown or decumulation, if you will, right? Having attrition rates of only 10%, right? And high-value clients at the same time is a very, very sound business plan. We can augment that with the funds and models, which you can see here will still be a very big part of this business. As a matter of fact, still, in 5 years' time, the largest contributor to profit. But make no mistake about it, it's a very competitive world, and it tends to blow hot and cold. So you can get big volumes in, but you can also get big volumes out. And so in an environment like that, it just makes sense to me, and I think to all the rest of us, that we should have a business which has 4 legs to stand on instead of 1 leg which is under most attack. That is our business plan. Go from 1 strand of a business to 4 strands of a business, relationship driven. And that is what we want to do over the next 5 years. FTSE returns over the last couple of years. So when we do our budgets, we infer, where's Charles? 4.5%. About 4.5% returns from the market, and we build that into our plan. So this year, right, the markets have been about -5, 5.5, if you will. So taking the distance from plus 4.5 that we build in as a long-term expected return, and no 1 year is going to be exactly 4.5, but over the long term that tends to be what happens. And what we've experienced this year, it's about a 10% differential. And so if you're looking at an asset base of 12 or 13 billion pounds to start with, then we have had an adverse impact of about $1.2 billion in money on our current year performance based on market movement. And that's going to happen every couple of years. And then every couple of years, you're going to be 7, 8, 9, and you're going to get the benefit going back the other way. That's normal in a cyclical business. But when you take a look at what we have achieved this year, then please remember that we had a 10% headwind this year, and we have still managed to do pretty well. If you look at the assets for the year, despite that headwind, you can see that the assets over the last couple of years have gone from almost 11 to 12.5 to 13.8. Now that includes TCAM, right? But even if you take TCAM out, we still have had a positive year in terms of net asset flow. And you can see in particular, right, that platform, right, has attracted assets to the point where we're now up to about $5.5 billion. So the fastest component, the fastest growing component of the business is platform. But the discretionary in the IFA world has hit $2 billion, and now the discretionary in the direct world has hit $2 billion. So if you add discretionary, the two of them together, we now have $4 billion. That is critical mass, right? And the margins in that part of the business are the highest in all of our business. As we said, net new assets, excluding TCAM, right, was still positive. And you can see that we've had a little bit of a headwind there with funds and models for all the reasons that we just talked about. We expect that over the next 12 to 18 months, that will turn back into a more normal situation. And that's what we factored into the 5-year plan, that we continue to have a little difficulty next year, and then toward the end of next year and going forward, we get back onto the positive track with funds and models, largely, but not only, due to the efforts of the new investment management team. Profitability, despite that very, very strong headwind that we talked about, we've managed to keep profitability on a level with the last couple of years. And if you look a little bit closer, what you'll see is in 2016 and 17, you've had a big jump in expenditure, right? That is the investment that we have put into the business in order to go from a one-track business to a 4-track business. And that was a 3-year plan agreed with Caledonia, all by design. And we're now at a point where we think that the investment that we need to make to build those 4 legs to the platform are in place. So going forward, right, we no longer think that we're going to require the same level of increase in expenditure. There to there, although it doesn't look it on that slide, is actually flat, because here we don't have all the expenses. We don't have the expenses of TCAM for an entire year. So if you were to factor in TCAM for the entire year, you'd be looking at a number of about 41 odd to 41 odd. So what we are now seeing is we've made the level of expenditure that we've needed to for investment over the last couple of years. We've hit a rough market, and we have managed to maintain profitability. So now start to think, what happens to this business when markets come back up and performance normalizes and the other 3 legs to the stool become sounder, so that the platform enhancements that we're making in the change management group come through, the financial planning proposition that Alex is putting together with Stuart comes to fruition for more than just the team in Edinburgh, and that the new IFA proposition for discretionary, which I'm very, very excited about, the retirement income service, which you're going to hear a little bit more about, when they all drop into place and we have more normal markets, right? I think you can do the numbers yourself. We stand to be in a pretty good place going forward, right? And the budget over the 5 years will reflect that. So that's enough for the strategy. We're taking a business that was over-dependent on one component of the business that had become very, very competitive. It will still, in 5 years' time, be the most important part of the business, but the other 3 parts of the business will catch up to just about level with it. And that's the strategy for the next 5 years in 7IM. So what we'd like to do now is to turn over to Martin. We've talked a little bit about what's going on in the investment management team. Then we want to hear what's going on in the 2 channels, so Ronan and Stuart, and then Phil a little bit, and then we have Kate from the HR perspective, and then Justin to bring us up to date on some of the very, very nice work that's been going on from the charity committee. Then we can do a little Q&A, and then we can have a little fun with Greedy, and then we can turn over to party time. Martin, over to you.
Thank you, Tom, and good afternoon, everyone. For those of you who don't know me, my name is Martin Sergei. I joined the firm just over 2 months ago now as CIO, so I'm very much the new boy. And first of all, I really wanted to thank you all for the really warm welcome that I've received. It really couldn't have been any better. If only financial markets had been quite so kind, as they've headed down in pretty much a straight line since the day I joined, which I really hope is not a bad omen for the future. Now, over the next 10 minutes or so, I'd like to do a couple of things. First, I'd like to run you through the review that we've been doing on the investment side in the last quarter. And second, I wanted to briefly explain why we are optimistic for the future. And finally, I'll take a brief look at what financial markets may have in store for us in the new year. Well, as you know, we do have a new leadership team on the investment side, with Terence Moll, our new chief strategist. Haig Bathgate is our head of portfolio management. Ian Jensen-Humphreys is our deputy CIO, and I am the CIO. Now, the title of this slot is Back to the Future, and that's because I don't necessarily want you to decide which of one of us bears a comparison to Marty McFly or to Doc Brown, but I think that is Terence. But because the review that we're doing is really designed to reinforce the commitment that we have to what were the founding principles of the firm, which, as you will all know, is to do the right thing. It's to do the right thing simply and well. It's to be clear and transparent in what we do and the way we communicate with clients and with each other. And of course, it's to provide excellent service. Now, as we've conducted our review, it's really struck me that we do start from really quite a strong position. So it's very much evolution rather than it is revolution. On the investment side, for example, I've been genuinely impressed and frankly sometimes rather intimidated by the depth of knowledge and the intellectual capabilities we have within the team. We've got a team of very experienced, highly committed practitioners who I think are determined to do a good job for our clients and for you. On the client-facing side, I'm absolutely convinced that we've got an outstanding sales team whose attention to client service really has built very deep relationships, and I can already sense that there really is a very significant amount of client goodwill towards us as a result. People are willing us to do well. I think as well, as an outsider initially, the journey and the history of the firm, together with its reputation for innovation, is also, I think, a powerful combination in today's markets, which can be dominated by the very big, bulge bracket firms and so on. And I think finally we've got a comprehensive suite of portfolios, which are all managed under the very watchful eye of Simone, and really a first-rate risk management function that candidly I think would be the envy of many much bigger businesses. And also the other thing why we're so positive is actually the investment process works. We've got a couple of slides here. You can see here that our core passive balance model has outperformed our competition on a rolling 3-year basis, even allowing for the dip that we're currently having. And more impressive still, I think, is if you look at the rolling 5-year period since the inception of the Balanced Multi-Manager Fund in 2003, you'll see that it's beaten the competition in every given rolling 5-year period during that time on 93% of occasions. For our more recent AAP Passive Balanced Fund, the same analysis since its inception in 2008 reveals that this fund has outperformed its competition 87% of the time. So this really is a process that has worked, it does work. We are experiencing a dip at the moment, which I recognise. And before I get too carried away with the backslapping and the self-congratulation, I am acutely conscious that recent performance has not been exactly as we like it. We know that we've got a bit to do, and we've got a bit to do in terms of the way that we're set up as well. But we are starting, in my opinion, from really quite a strong base. So starting from the beginning, what have we been up to over the course of the last 3 months or so? First, I think we want to restate what we stand for, what are our investment principles, and obviously the first thing we have is a determination to deliver strong investment performance across the piece. But I think it's equally and more important than that to some extent, is that performance has got to be the result of a genuine and repeatable team-based approach, rather than relying on the unique alchemy of any one individual or relying on the unique alchemy of any star manager. We really want to succeed as a firm together. I think elsewhere, when we look at what we're trying to do, we recognise totally that portfolios have become a little bit unwieldy and hard to follow. So we've got to simplify those and we've got to reduce the complexity there. We'd like to get to a position where a clear house view and understanding of what we think about markets cascades through the firm and is the foundation for every client discussion that we have. I think we'd also obviously like to show some humility as portfolio managers. We do recognise that not everything is going to plan exactly at the moment. We recognise that we need to build confidence and to make sure we listen to our clients, we listen to our client advisors in order that we know what exactly it is that needs to be put right. Cost control is important, of course, so we're absolutely focused on costs in terms of the running of our business and in terms of the way that we run portfolios. We're conscious that we want to maximise returns for both our shareholders and for our clients. Every cost that we have is net a deduction on the returns that we're able to make to both of those groups. So our objective as well, I think, is to have a very broad portfolio offering, and I'm genuinely convinced from my experience at other places that we really do have. There is something here for clients of all descriptions, for clients of all risk appetites. There's something here for nervous investors. There's something for more aggressive investors. There's something in our offering for wealth preservers, for wealth creators. There's something for investors who have an aggressive mindset. And there's something for investors who have a more conservative mindset. But not only do we have the offering for all of those different risk groups, I think we can deliver the solutions in a variety of ways, as you see here. I mean, our core multi-asset class offering, it comes in 3 forms. As you know, for the cost-conscious, we offer a range of diversified solutions under the AAP banner, using predominantly cheaper, passive or index-based investments. In the middle there, you can see for those who are willing to pay a little bit more, we have access to what I think are some of the leading external managers in the industry who we are able to harness under our multi-manager banner. And last, I think, but by no means least, and something that we're all very excited to have, is our Select offering, which some of you might know by its former name, the High Conviction offering, which has been imported from TCAN, which of course delivers concentrated solutions with meaningful protection against market setbacks. I also wanted to make sure that when we're talking about our overall offering, we don't lose sight of the bottom piece here, because in addition to our overall core offering, we've got a number of high added value individual strategies to meet specific needs that clients may have. They might be on the income front, they might be on the inflation front or whatever. But interestingly, we also have really top performing proprietary capabilities in the equity value category and also the highly topical sustainable category. So really this is an offering that I think that we can be proud of. We want to make sure that it's firing on all cylinders at all times, but the basic offering I think is very much there. Now all of this is all very well, but everything we do is about our clients. So what should they see as a result of all the changes that we're making? Well, ultimately, we hope that they don't see very much, because the refinements that we're making are exactly that. We know that if we were talking about huge change, that's disconcerting to our clients. And this is not huge change by any means. It's a simple reinforcement of our principles. But what they will see, I think, is they will see and they will notice enhancements to the basic process that we have for managing money. I think they'll see simpler and easier portfolios to follow. I think they'll see more choice and hopefully they'll see better performance. And I'm absolutely convinced, and I know that they'll see better communication from us and to all of you as we go forward. But really the message is, and I'd like to reiterate it, it is evolution, not revolution. So I can't finish the investment slot without spending a couple of minutes, and it really won't be any more than that, on financial markets, however much I might not want to do that, but Tom insisted that I did do it. And you can see the reason for my reluctance here, with practically every major market this year likely to post a negative return in 2018, something that hasn't happened for something like 20 years, with only gilts managing to eke out a very mildly positive return. You can see here emerging markets are down something like 15% now. UK stocks are now down over 8%. Corporate bonds are down 4 to 5%. And even the absolute return focused hedge funds are now down something like 8% on average from this morning. And certainly financial markets, as we know, have had a lot to contend with in 2018. They've had moderating economic growth, they've had rising interest rates in America, we've had a tweet-happy President Trump who's initiated a trade dispute with China. Europe has struggled economically and politically, and the Brexit shambles is frankly the gift that goes on giving and is likely to do so into 2019. So many of those issues are, at the time of speaking to you, somewhat unresolved. So presumably you'd think that we're going to be really worried about 2019 and beyond. But actually that's not really the case. Because when we look at fundamentals, as we always do, we're really quite constructive on the outlook for risk markets over the next year. We tend to view investment markets through a prism of four basic metrics. We tend to look at growth, we look at monetary conditions, we look at valuation, and we look at sentiment or flows. And taking each in turn, if we start on the left-hand side here, you can see, yes, growth has moderated somewhat, but we can see that it's still pretty good on the whole. And crucially, there is no immediate sign, in our view, of a recession, which would certainly spook investment markets. For monetary conditions, policy continues to be very, very accommodative globally, even in the United States, where they've recently increased interest rates. But generally, bond yields and interest rates remain extremely low, and crucially, there's no immediate sign of inflation doing much than tick up from a very low base. So I think that we can be reasonably optimistic that the monetary environment will also be fairly positive for us. I think that probably took too many times. And also, when we look at the next couple of things after the disappointments of 2018, the silver lining has been that, of course, valuations have become somewhat cheaper, and they're no longer particularly expensive. We can see on the left-hand side that we're now trading somewhat below our 40-year averages, which is an encouraging thing. And finally, sentiment. Sentiment continues to be extremely cautious. This is being referred to as a very unloved bull market. It's not the case that we're continually reading reports to tell us that market participants are very optimistic. There is not complacency in our view, which leads us to be rather constructive that sentiment is not going to derail us in 2019. So that's all I had for you now. I do hope that was useful, quick canter through what we've been up to. I very much look forward to seeing you all at the party later on, when I'm sure you'll be keen to quiz me on some of the finer points of the refinements we make into our investment process. If that is the case, my advice to you would be to get me early. And thank you very much for listening. On behalf of everybody in the investment team, we'd like to wish you all a very happy Christmas and a healthy, prosperous New Year to you and your families. And on that note, I'd like to hand to Verona, who's going to tell you what we've been up to on the intermediary side.
Okay, thank you, Martin. Right, so what am I going to go over in the next, say, 15 minutes? There's going to be a little bit of shock. There may be even tears. They might just be my tears, actually. Then we're going to have a little bit of a recovery. Then there's going to be comfort, and then there's going to be a lot of excitement. And I'm not just talking about the Christmas party. So we're going to start with the shock. Okay. What's our target? What's the intermediaries team target for next year? It's okay to gasp when you see this figure. Oh, I've gone too far. There we go. As I said, it's okay to gasp when you see that figure. Yeah. Tim's still crying when I showed him this figure. Yeah, we do have a really big target next year, just over 3 billion. When you first look at that number, you're like, okay, it's a big number. But let's break it down and let's see it's not so scary. Still pretty scary, but not as scary. So what you can see up there is actually the gross sales targets that we have for each of our business lines there. So we have a platform, pretty big target there. We need to get 1.7 billion in. Then we've got our discretionary, going up a little bit from this year, actually quite a bit. Pretty big target there. We've got funds, which we've broken down into our own 7IM funds. Then we've got TP, which is the True Potential funds. And then we've got models, and I'm going to talk a little bit more about models. Now, those figures look pretty big, they look pretty scary. They actually only tell half the story. There are gross inflows in, but just as importantly and just as critical is our outflows. Those are the outflow figures, so that is the amount of money that is going to leave for various reasons. Sometimes it's just like clients in retirement actually want to get their money back, can't stop that. And for various other reasons, we'll see those kind of outflows. What's really important is that we need to focus on those as much as we focus on the inflows. And that's just not for the sales team. Operations, you guys not only have to process everything that's coming in, but you guys get the double bonus of having to process everything that's coming out. So that means dealing and client static and recs and everything that we do has to worry about both those figures. Now, we're going to try and minimise the outflows so you don't have as much to worry about in the outflows. And maybe we may give you more to worry about on the inflow side of things. But it's important to realise that actually it's not just us in sales that are trying to get the money in, it's then the roll-on effect throughout the business of us having to manage and to process that business. So those are the figures. How are we going to do it? Well, I suppose the first question is, what do we actually do? So what do? We actually support financial planners deliver for their clients. That is the role that we have in the intermediary side of the business. How do we do that? Well, we actually support the face-to-face financial planning that the firm wants to give, the financial planning firm. We provide for them one of 3 things, or all of 3 things. So of course we have the investment management. If they're looking for an investment solution, whether that's a fund or a model, we can provide that to them. We also provide the service. So if they do want to use discretionary, we have the discretionary service there, and then we have all the other service that we support them with. And then we also provide the technology, whether that's in the form of the platform, and firms that choose to use our platform, or firms that are using our discretionary service and also using, say, our app, Set Imagine. That's what we do in the intermediary side of things. At the end of the day, we want to make the intermediary deliver and look as good as possible to their clients. How the firm actually chooses to use one of all 3 of those is really up to the firm. At the end of the day, when it comes to working with intermediaries, the old saying is so true: their success is our success. They get more clients, they do more business with us. So it's really important that our service actually supports the service that they're providing to their clients. So how do we actually put that into practice? What do we say that we've got? Well, we have a lot of stuff. Oh, sorry, last word I forgot there. What does all this mean? Is actually we want to work in partnership with the firms. And that's really important. Once the intermediary firms see us as a partner, that's when they'll come to us and maybe actually work out that they actually want to use our technology as well as our funds, or maybe our discretionary service. That partnership and the relationship that we have with the firm is actually one of the most critical things, and that is sort of what everybody strives to get, is that partnership via the service that we provide. So how do we actually put that in practice? What does that mean for the products and the services that we have? Well, we actually do a lot. We have onshore, we have offshore, we have AAP, we have multi-manager, we have models, we have a whole lot of stuff. Do we go and tell a firm all of that stuff that we've got? No, we don't. Because that big list that was up there, that's all great stuff and it's all the stuff that we do. But actually, when we're going to talk to the firm, we actually find out what they want, because it's about them, not us. Then we might tell them about the things that were on the slide, maybe all of them or a part of them. And that's really important, that we actually find out what their needs are and put that out for them. So if we've got all this really good stuff and we're finding out what their needs are, how do we actually then go about working with the firms? Now, what we're going to do is we're going to keep it simple. I think there's been a lot of talk around, oh gosh, we do so much, how do we go out there and tell the firms everything we do? And it's really important. Let's keep it simple. We're focusing on them and what they need as a firm and what their clients need. We build the relationships with the end goal that they want to partner with us. So for next year, to keep it simple, there's 3 main things that we're actually focusing on into next year. Our retirement income service, our model portfolio service, and investment management. And I'm going to go into all of those in a little bit more detail. But before I do, I can't actually forget about platform. We have actually won a lot of really good advisory firms that use our platform. A lot that have recently just signed up to use the platform. There's a really big focus on getting those firms embedded. At the same time, we know, not just on the platform, but across our business, we actually need to be easy to do business with. If a firm and a client wants to work with us, we actually get them to complete many, many forms and sign many, many documents. We need to streamline that and make that much easier. And we have to make sure that the platform not only supports the advisors that want to use the platform, but we need to actually make it work for everybody internally as well. Okay. The retirement income service, there's been a lot of discussion around that, and just to put it really simply, it is discretionary just by another name. A lot of the stuff that the retirement income service will do, actually, our discretionary relationship managers have been doing for years. This is the point in time when, because of things external to us, such as pension freedoms and everything, the advisory community actually have a real focus on how they're going to support clients that are in or out of retirement. What's their biggest concern and what should they be most worried about? Actually, they really need to focus on decreasing the chances of the client's money running out in retirement. That's the big part about the retirement income service. It's us supporting the IFA to make that actually a reality, in that the client has more certainty that whatever they've saved up during their accumulation phase is going to see them through their retirement and maybe even leave a pot of money for the next generation. So it's service to the clients, but also to the advisors, because we're de-risking the plans that they're putting in front of their clients. It is a discretionary service, so it's harnessing all the good things that we do in discretionary. It sits on the 7-9 platform, so it's using a lot of the really good platform functionality, and then we've got the reporting from the platform that supports it. All the time sitting in discretionary. So that's going to be a really big focus for us, specifically our roadshow next year, which kicks off at the end of January. It's going to be a big focus on our retirement income service there. The next thing that we said we're going to focus on is actually model portfolios. Now, there's been a bit of a party going on out in IFA land and advisor land around models. We've been late to that party. So what do you have to do when you're late to a party? You have to make a grand entrance, right? And that's really what we're doing next year. We're really going to be pushing forward with the model portfolio service that we have. Okay. The way that we position it is it's using all the good stuff that 7-9 Investment Management have, and critically, also the risk management that we have, which is, as Martin mentioned, a really strong USP for us. putting that at the centre of our model portfolio service. It's that expertise that we have. So there'll be a lot more noise and a lot more activity and a lot more discussions about the model portfolio service that we have. And then lastly, investment management. So Martin ran everyone through all the great stuff that's happening in the investment management team. The one thing that we've been really focusing on, and what's most important when you're having a good partnership, is communication. We need to make sure that we're all speaking with the one voice and have the one message out to the advisor community. And that's really has been a really big focus and will continue to be a big focus for us next year, to make sure we've got that one message out there. So I suppose in summary, on the intermediary side, where are we? We've got a big target, good thing. It's probably the biggest target we've had. What's really good is that we've got the biggest team and also the best team. And that's just not everyone in the sales or relationship management or platform team. It's also every other part of the business. Our investment management team, operations, everyone else that actually supports that. And lastly, we are really going to focus on and working really closely with the marketing team to keep things simple, to be clear, to be concise in everything that we do, and all the materials and the literature, even the way that we present, so that actually we go back to some of those tenets that we were speaking about earlier about transparency and clarity. So really, next year, 2019, it's going to be a big one. It's going to be huge. A lot to be done, but we do have the people, the products and the services in place to make it happen. I think I'm now going to hand over to Stuart. Yes? Who's going to give a direct update?
Thank you. It's going to be tricky standing still now for 10 minutes or so. Firstly, is everyone comfy? Because I know the biggest issue at the last summer update was the chairs were uncomfortable. So is everyone kind of having a little wiggle and everyone all right? Yeah, okay. So we're on slide 36, so I'll get through a few for you. I just need to work out, I assume you click right, but Verona's walked through there of what's going on in intermediary. I think before we talk any more, that it's really, really important. We might have two channels, but we've got one combined business, and at different points in time I know there'll be friction and I know there'll be challenge, but realistically the intermediary business drives 7IM, and what I've been asked to do and asked to talk about now is direct, because that's what I'm paid to do. But my roots are in 7IM, as everyone in PCT is, and we understand that we have a part to play. Tom's highlighted that part. We've got to grow the business. It's incumbent on us to do that. So I'm going to update and talk a little bit about private clients and what's going on in the direct world. But first and foremost, I think the work that Verona and George and Robert are doing, that is the business that we need to carry on supporting and driving, irrespective of what we do together. And we'll touch a bit more on that as we go forward. So, in September 15, I kind of thought I knew what we were meant to be doing. We had a business model, we understood what we did, and we made that decision to go direct. And Tom's touched on this a number of times in different updates, but that concept of let's go direct sounds really, really simple. But I think the longer we've been doing this, and the more time that as a management team, and in particular in the private client business and working really closely with marketing and trying to understand the nuances of how we sell our proposition to a different audience, we've realised just how different the two areas are. So it's felt that whilst we've had an ambition to grow and whilst we've had an ambition to make the business as big and as strong and as capable as we can be, we have recognised fairly on there was a few gaps in terms of what we needed, but it didn't dilute from having the ambition to grow a business. I have felt lost along the way, but I think we're now in a situation where we start to really have no excuses. The missing bits of the puzzle we've now got, they're in our gift to go and do something about it. And I'll try and outline some of the stuff that we've done through the course of the year in the next 10 minutes. So I guess what I'm going to tell you about is what happened in 18, what we're working on now, what we're trying to do in 19, and then just a bit of a flavour as to maybe what's to come and how, as a business, we can start to shape the perception of 7IM. 7IM is renowned across the industry of being a very, very strong, capable provider of a variety of investment content and services and tools to the intermediary marketplace. it's not particularly known as a provider of direct services or private client stuff. So on one hand, that's a real challenge, and we've seen that over the last few years, but on the other hand, there's a huge opportunity to try and contribute positively to the business in terms of moving forward. Before I do that, Tom hates this slide, by the way, as does everyone on the management committee, because it's too busy, and I understand why. But the point and why it's in here is just very simply, Verona touched on it earlier, and I'd absolutely echo her view. We are a team. So whatever part of the business you're working in and whatever thing you're doing day in, day out, the people that go and see clients are just the lucky ones that get to take what we're doing and bring it to life with somebody. So we're fortunate in the fact that we get to represent this business, whether it be on the intermediary side or whether it be on the private client side, and share what we're up to. But we can't do any of that without having real help and support in hiring the right people, in having the right content, in having our systems working, in having the right performance, risk management. Whatever asset or element of the role that you're doing, it's really important that you remember that connecting to that, the guys and girls in the sales teams, we just have the privilege of going talking to customers. So whilst that might be difficult enough at different points in time, actually without all of the work of everyone in the team, there's no way we'll be able to go and do that in such an efficient way. So accepting the challenge was to go direct, and accepting the challenge was to meaningfully contribute to the business. We had to go away and do something about it. And I suspect over the last few years, for everyone in my team that's worked with me, it's been a real challenge in understanding how to go about doing that. And we've had to try and build momentum. And at times it has really felt difficult. How do you grow AUM? How do you grow activity? How do you grow opportunities? How do you go and be relevant to a marketplace that doesn't know who you are or what you do? So trying to build momentum, and we've spoken about this a lot, has been a challenge, but I think we're at a stage now where as a business and as a direct business, we've got a number of things that are starting to contribute positively. So let's just go through and review 18. We have a target nowhere near 3 billion, thankfully. In fact, I don't even think at the end of 2020 or even 2021, the total direct business is likely to have 3 billion under management. So there's a lot to be done, but we can begin to contribute. And last year in 18, we started to make a difference. Flows, and by flows I'm talking about inflows. We added an extra 80%. Is it the right number? Probably not. But is it almost double what we did the year before? Absolutely. And moving forward, do we need to do a lot more? Absolutely again. Tom touched earlier, when you control the client, I think it gives you half a chance to have the ability to explain the story. It's really difficult sometimes when you don't get to talk to the client in order to add context as to what's going on. And one of the things that I think goes without saying is the work that the assistants and the relationship managers have done in terms of engaging the back books really helped us. Clients have been loyal through the course of the year, they've stuck with us. We've not always delivered the best performance or the performance that maybe we wanted to do for a variety of reasons, but actually people by people. Do I like you? Do we trust you? Are you credible? And as a result of that, we've been able to maintain some of the assets, as has happened in other parts of the business. The other thing I think that is really important is, we spend a lot of money now on marketing, and I'll touch on that in a second, but in terms of marketing and creating opportunity, the one thing I think people need to take away is anyone that we've got to see, and Nick and his team have managed to book in, we count those as opportunities, and for every opportunity that's been created, we're on roughly a 29% conversion rate. So that's every single client we've met, be it through the FT or the Spectator or a mail merge or whatever the thing may be that's come through our website that's generated our meeting, 30% of those are now clients on the books. Now that may not sound, terrific, okay, so 70% didn't make it, but that's an ongoing number. That's a number that we can carry on building, and the marketing database now is kind of 10,000 people, and there will be a time and a place for some of those people. It wasn't a no, it's just maybe a not now. We've added in London, clearly. That was part of the investment and part of the cost you saw earlier. Also part of the cost of the investment you saw earlier was Jersey. And I know Grant's here today, but Jersey will be a strategically important thing for 7am. We're talking now about Brexit, we're talking now about potential Labour governance, we're talking about uncertainty, and people are starting to get nervous about where and how they hold their money. Having Jersey custody, a Jersey office, doubling funds, we start to at least be able to fulfil some of those products and services, not least why we opened the thing in the first place, which was not on the basis of a hedge against Corbyn or McConnell getting in. The scenario, realistically, that I'd like to add as well is that during the course of 18, in our own scheme, we got towards the thick end of £1 billion. But as Tom said earlier, we're now through 2 billion. And one of the reasons we're through 2 billion fundamentally is that we've been able to acquire and work with our colleagues in Edinburgh to bring TCAM on board. And TCAM has migrated and moved around about 100% of its clients. I say around about because it's almost impossible to say every single client, but I know of one or two or a handful that have not come across, and they've not come across because they've not signed our terms and conditions or they've not wanted to move. There's been reasons why they've left the business. So the people at TCAM that have engaged their clients and looked after them through Alex and Haig's leadership, you know, they've stuck those clients together and they've moved across to us, and there's been a hell of a lot of work by a huge number of people in the room on both sides of the business in going backwards and forwards, investing, developing and trying to make this happen. And for the last 12 months we've been looking at the migration, and we've been focused on that migration date where we moved everything across at the end of November. And the money's been moved across, people have done a fantastic job across the business, but you also need to recognise in many ways we've just made the job temporarily much harder for our colleagues in Edinburgh. The way in which they've run the money and the way in which they've run their systems, we've just now thrown those systems out and moved them to our own, and we've got some pinch points now through the next few weeks while we begin to transition investment ideas and investment solutions to really try and help people bring that to life. But the will's there from everybody in 7IM, and forget the TCAM acronym if you will, we're one team now to try and take that forward. And I think inheriting the skills and products and services will just add to what 7IM does. So from a direct perspective, we are now in a scenario where we've wanted to be able to do financial planning, we've wanted to be able to engage with the family office, we've wanted to be able to have a different style of running money for those clients that are perhaps more sensitive to the downside. We've wanted greater conviction in some of our positions. We have those tools in place now. And I think that the trick now is about us bedding this in, acknowledging that a lot of hard work's happened, but also a hell of a lot more hard work needs to happen to make that come forward. The one final thing I'd say on that, outside of the people who, to a man and lady, have really rolled their sleeves up and got involved from both parties, is TCAM's revenue expectations that Charles and everyone put together. We've kind of exceeded those. So it's as we stand here today, it looks like the migration and the hard project work that Jennifer and Phil and everyone pulled together has really got us to a place where we can begin to have a platform to move forward. None of this should be a surprise to you. We've telegraphed for a while that financial planning or structuring someone's affairs, this is a 7IM business that's built on working with financial planners. So much of the wealth in the UK, people need a planner to help them. So for our own clients, for TCAM's own clients of legacy, we need to be able to continue to do that financial planning. We're starting to gradually broaden the proposition. Alex is in charge and responsible of writing that programme of what do we want to do, to whom and how. And over the course of 2019, I'm sure we'll make some fairly significant strides in terms of how people engage with us and what they can and can't do. We're also, as Martin touched on, going to have other investment tools. We've now got the select models, but the select funds will come shortly, and hopefully will be at some point towards the end of Q1, which will start to allow us to utilise our unitised way of investing, but with a slightly different style. And I guess much of the other three there are one and the same thing. It's about being relevant and engaging and taking on more clients. The way in which we're doing that is gradually changing the marketing website, the tone of voice of how we acquire clients, and having a strategy around how we engage them. We're really lucky in, I guess, the direct world to have £1 billion of our own, under our own term, but we've never really worked with those clients to engage them and understand. Verona talked very passionately about partnerships. I think for a lot of our clients, we would be seen as an investment provider. We need to change that so we become a partner, we become someone that they know, someone that they turn to, and someone that they'd be prepared to refer their friends or family or other colleagues to. And I'm not saying we don't do that, but we do it in isolated cases. Jane put together this slide for me just to highlight the fact that marketing, have done a fabulous job in trying to help us tell our story. We don't know what we don't know. So going back to September 15, we didn't know how to go and find a client. We didn't know how to find a direct client. You can't look on the FCA website, you can't look at registered firms. Private clients don't advertise anywhere to say, please, I want to now come and talk to you. So we've had to use other methods to try and engage them. And what we've learned continually is that what resonates with them is about their story, it's helping them solve their problems. So the tone of voice of what we're doing in marketing and the tone of voice of our literature and the new website, which will go live thanks to the hard work of everyone that's been working on it early in 2019, is very much about helping people. It's very much about organising things. It's about doing things together, and it's about us being a provider of services as opposed to trying to sell them something or talk about investment management. It just doesn't wash for people. They want to know how they're going to plan for retirement. They want to know how they're going to achieve whatever their goal may be. They don't really care whether it's active or passive at that stage. It's about helping. And I think one of the things to bear in mind, the direct marketing spend, which is kind of split 50-50, so that's disproportionate. Direct is a smaller contributor, but we get more of the marketing spend. That's about trying to invest for growth, and that's about trying to deliver where we get in the future, because we need to be a meaningful contributor in terms of what happens moving forward. Nearly there, I promise. So the year ahead, there is no 3 billion number there, but what there is a loss-making business turning positive. So everyone in this room has been part of 7IM, I'm part of 7IM, we're all in it together, and the direct business has been an investment, and it's now beginning to pay off. If we hit our numbers this year, we start to make a meaningful contribution to the firm. If we continue to grow in the trajectory that's been set, that becomes a more balanced way of us driving the business forward. It's not a better business, it's a different business with different clients. Key priorities as I touched on earlier, Alex will be working closely with George Martineau and with the financial planning team in Edinburgh and the power planning team to help us centralise advice and help us have an integrated wealth management offering that people can actually use. So not one that is clunky and not one that is built in a way that just replicates the market, but something that's truly a little bit different, a little bit innovative, a better way of people engaging with us, the ability for clients to take control of the things they want to take control of, but actually take advice where it deem it appropriate. And you'll certainly see Nick and his team will have to be very, very busy. We can't do any of this, coming back to the momentum point, without more opportunities being created. So the programme of events that now is lined up to drive opportunity between marketing and the private client business development team is bigger than it's ever been before. The scale of ambition keeps going up and keeps increasing. And what I would say is you're going to see more and more of that moving forward, and hopefully the tone of that is very much around helping people. And it's to try and drive 60 meetings a month, because of those 60 meetings a month, we're pretty sure that we can convert 3 out of 10 of them, and the average conversion is starting to gradually creep up into a sizable number in line with our average client. I guess how you can help is to help us share our story, is to help us give some feedback, is to be aware that we now are a business that is very much in 2 completely different channels. And the private client business, or the direct business, is over a couple of billion, has some scale now, and actually it's going to continue to grow. So if people ask who you work for or what you do, actually depends on the lens and the frame of who you're talking to, but ultimately we would just ask that you're aware of both sides of the business. As I say, we can only be successful if both sides work together, and if we do that very well moving forward. The advocacy and the referral is just really important. The staff referrals that we put in place have made a decent business change. More of that will help us, but actually what really helps us is just people understanding we're in this business and we're there to help. And the final slide is, this is a bit deep and meaningful for me, so I apologise for that, but this is about having a growth mindset. It's about accepting that most weeks I definitely make mistakes and everyone in the team will make mistakes. And we're going to do that when we're growing. We're desperately trying to run and grow this business while changing the wheels and trying to add everything else as we go. You're going to hear from Phil next, who's been really busy. He's got an incredibly busy lineup of work still to do, and we're trying to tinker with so much stuff. We're going to get things wrong occasionally. We're never going to do it deliberately, and in getting something wrong, we've got to learn from what we've got wrong in order to improve it. So if things go wrong between the private client business and intermediary, if things go wrong with a client, if we're challenging ourselves in terms of the integration, some of that's going to be okay, providing we're doing it with the right intention and we're trying to help our clients and grow. The trick for me is we've got to learn from that, and if that continues, I want to know about it. If there's anything we can do to help fast forward or accelerate the business, please come and tell us. But I'll leave there on slide 47, and I will hand over to Phil, who I'm sure will be able to walk us through all of the changes happening.
Right. Got your hand over there. Good afternoon, everybody. And first thing I want to say is Merry Christmas to everyone. Yay. Right, we're going to talk a bit about change management, but before I do that, there's a couple of things. One is focusing on change management, but actually this really covers not only change management, but IT and operations. And I just want to say a few things about unsung heroes. There's a lot of people out here in this room who actually keep the lights on. We don't see it, we don't notice it, but if they didn't, we really would notice it. Those guys in our app support teams, and in our IT teams, and in IT itself and operations who are doing daily things for us that are unsung, but just want to say thank you to them to start this. Next, I just want to go back to values, actually doing the right thing. And I'm honoured that I can work with most of you in a year on something, so I nearly talk to all of you, do something with you, and we have so many people who do work to our values, which is great. And even better was when I walked into the Edinburgh City office, was to meet a bunch of people who also share those same values. It was a thrill to see that going on from day one, so thank you to all of you for keeping doing that. Right, a little bit about change, not too much, here we go. Big diagram, big wheel. 25 major changes, 181 functional changes relating to service stability. When I walked in 2.5 years ago, we had quite a lot of problems with our stability. I'm pleased to say in the last 6 months, we've hardly had any, and that's a real big thing. And that's not just a bit of work, that's been probably 2 to 3 years of hard work going on in the background to make that happen. So again, thank you. 237 business requested bug fixes, and 54 changes relate to the start of day. And that was another area at the beginning of this year that was not great. We kept coming up late, and Tom kept kicking me, and I didn't like being kicked by Tom, so we've done a lot of work there to make that change. And just a couple of the projects, I'm not going to read them all out, too many, but I think you've got things like active models, illustrations, initial payments. We pay our IFA customers quicker, great regular payments, the pension. We just did a minor thing of setting ourselves up as a pension company. That's going very well, and it puts us in good stead for next year. And even though we've been doing all that, and we've been doing that little project called Fusion for TCAM, I'll talk about that in a minute, still, we get to this time of year and there's still a bit of excitement. We've got some big things just about to happen at the turn of the year. We've got the new Direct website going live, and I had a look at that today. I haven't seen it for a while. It looks great. So that's really good to see that coming on. And also, we've got D2C. D2C. What is D2C? It's a bit of a confusing term. Some people probably argue it should be called B2B2C, but that's horrible. That's just yuck. But the thing about D2C is we are delivering, primarily to our IFA customers, a service that will enable them to capture clients earlier in their life. Those clients who haven't quite got enough money for their main services will be able to use our D2C service and buy 7IM funds, either through ISAs or GIAs, and in sometime next year through pensions. I think that could be a really smart move for us. But I think people are confused and maybe think it's just about direct. It's not. It's actually mainly an IFA vehicle. One I'm really excited. It's one I started when I came here, so 2 years later. Boy, is that taking longer than I thought. But sometimes it just does. Right. Just talk about TCAM. So, lots of work again. Lots of work goes on around it. It isn't just a simple case of moving things around. Again, lots of IT complication in the background. We have kept some of the TCAM systems in order that the clients of TCAM don't get such a shock as they migrate over. So we're trying to make sure that that experience for those clients is as easy as possible and as less offensive as possible. But as Stuart says, there will be some glitches along the way. And as Stuart mentioned before, the great thing is how many of the clients have come over. But just talking about the asset side, so there's that billion, and we are at about 850,000, I reckon, right about now. So I'm looking for 150,000 million. If anyone can just check their desk, see if it's on there, I'd be grateful. Now, where that is, it's mainly in the unit trust, and you just get the unit trust companies, some of them are just awful at doing their admin, and it just takes them a while to get things over. I am confident that we'll have it all over before the end of the year. And again, thank you to all the people who've been involved in that. This one is amazing. I've been involved in a few of these migrations. I have never seen a figure like that. So well done. That is 96% so far, and it's probably actually nearing 97%. And that means that all of those people have positively accepted that they're moving to Seven. And again, thanks to the team in Edinburgh for all their work on that. I know I've been chasing you around over the last few months to try and get them in, but that is a hugely credible number, so that's well done to everyone on that. So just a little bit about change. A lot going on next year. So we did about 25 major projects. I think the guys have put together about 45 major projects for next year. No way. But we try and get as many done as we can. Some key things here that I just think are worth just sharing. Security alone might sound a bit dull, but it's not. We get attacked every day by someone, mainly from Russia, America, France, Germany, and a bit of China. So we are always being attacked, make no mistake. So our security login we want to improve. So what do we mean? We want everyone to be using something called two-factor, which means when they log on, not only do they put in a username and password, but they also have to use their phone to make sure the login is accepted. And that's so much more secure. The other great thing it does about that, one of my pet hates actually here is we still send out passwords by letter. How great is that? That will get rid of that. We will be able to send out passwords, people will be able to change their passwords online themselves, and that enables us then to provide digital services. And one of the things, when I first walked in here, I called Tom digitally incompetent. He didn't like it very much. But what I meant by that was we are way behind the world in our digital offerings. I know, and not in the world, in our own industry, we probably stand up okay, I don't think, but we've got to worry about the people who are not in our industry that might come into our industry, whether it's the Googles, the Amazons, that's what I'm worried about. So we have to make sure that we have excellent digital services. Everyone expects it. So that's a real fundamental block to that. And once we put that in, we can do things like secure messages. We actually be able to let people pay us money with their cards. I never thought of that. So it's going to be a great move for us, and it's going to take us another 2 or 3 years before I think we get to a place where I'd say, hey, we're up there with the rest of them in the digital capabilities. But we're on it. STP, straight through processing, a word that's been much abused over the last few years. We still have too many manual processes. We opened more than 10,000 accounts. We did thousands and thousands of transfers. And guess what? We used a lot of people and paper to do that. We've got to stop it. We've got to change that, and we're going to change it. We will get to a day, and we call it easy account opening, where people can get their account open and it doesn't touch the sites. That's what we're aiming for. It's not easy to do, but we're on that road as well next year. Great valuations and statements. I think it's time for us to look at. We in Seven have been said for a while that our valuations don't quite meet what we want them to do. We've also looked at the stuff coming out of our Edinburgh colleagues, and we need to put it together and give it a great reporting service. And the other thing we've got to do is give it properly digitally. It can't just be a PDF coming up on the screen. We've got to be a bit clever on that, and that's something again we'll be working on next year to make those things happen. Finally, a little bit about product. few things going on. So we're doing some fund consolidation. I won't go through all the detail of that, but we are bringing over the umbrella of TCAN. That's coming over in February. We're merging some funds, some going one way or the other. It depends on some factors of performance and things like that. But so we should have all that work done by March next year. We're also launching Select OICs, which Martin talked about earlier. So that's using the high conviction philosophy that's come from our colleagues in TCAN. And I'm doing a little service for Tom, but it doesn't. It's meant to be a surprise actually, but it's coming a bit early. US persons model portfolios are platform, but we've been working on it for a while. That should be launching in January, and we think there's a little bit of business around that market that we can do really well with, given a US tax reporting service. So that's being helped by our friends in IMIX, and that should be ready in the new year. So in the new year, there's already in January, there's about 5 new things going on, which is great. And I don't think our world will change. I think it will continue to accelerate. And so what that does mean for all of you, of course, is that we need always some help. So again, my last thank you day goes to all those people I know who help us every time we do a release and do the testing. It's an absolutely essential part of what we have to do. And I appreciate it's not always the nicest activity to carry out, but again, I thank you all for taking part and hope you will keep taking part, keep talking to us, and also the one thing I want to do, innovation is my thing a bit, and every one of you has probably got a good idea, so please keep telling us what those ideas are. And I'm sure some of them will come into fruition as a product or service in the next couple of years. So happy Christmas. Thank you again. And now I'm going to hand over to the lovely Kent.
You know, when I stand up, we're really close to the end, so bear with me. These are my notes. I've got 2 slides. First of all, we start with some congratulations. These are people who've passed exams in the last 6 months. We always want to support you in your professional development and your personal development. So you're coming up to appraisal time. You'd have got the email yesterday from Lottie telling you about the dates and when it's happening. That's your opportunity to talk about what you want in terms of development. Use it, speak to your manager, and then it all comes back to us, and then we pick up with you to say what's relevant. But well done to everyone. I know how hard it is to work and study. Right, brown bag feedback. So over the last sort of 6 weeks to 2 months, we've held 22 brown bag sessions. Right, the purpose of those sessions, and we should have also, the management committee members should have talked you through it. We started these years ago, and the idea is that you get a small group of people together who wouldn't normally work together. It's an opportunity for them to get to know each other in a small forum with a member of the management committee there. And the idea is it's not a big moaning session. You're meant to be talking about what you're doing, getting to know each other better. But there is always, at the end of it or throughout it, where your management committee member will say to you, what is it you want that I can help you with? What can I take back to the management committee? And we had some common themes that came out this year that we thought it was relevant to bring up today. The first was flexible working. That came up in a couple of our meetings. And I think we're really keen to understand, what do you mean by flexible working? And how can we address that? So what we're going to do in the new year, be led by HR, we're going to ask 6 or 7 of you to put yourself forward, or you can be nominated, we'll work it out. And you'll work with HR and the management committee, and we want to understand, what do you mean? What is flexible working? How does that work in your teams? How does it work across the teams? What does it look like? And then we'll come up with some proposals that we'll take to the management committee, and that's, I think, the best place to start. So if you think you can help in that, and you can work across the teams, then come and see me in the new year, and we'll work out the best way to do that. Also, I got a lot of grief over maternity and paternity benefits. Now, we want to be competitive, but it's probably true. They were put in place, you know, when the company started years ago, and it's about quite often as we grow, we need to look at, okay, what do we need to update, like flexible working, like our family-friendly policies. So, again, it's something we're going to go out to market, but have a look, we'll see what our competitors are doing. Are we doing what we need to in that area? And I think you all would have got an email today about our new private health. We're moving over to Vitality. We're always trying to find the most competitive benefits for you, things that will benefit you, and that's a really good scheme. So I hope you can see we're doing what we can there, and I will come back to you and tell you what we're going to do about those benefits. And then Justin's got a few thank yous.
I was going to say, maternity and paternity is not now compulsory. You don't have to have children. No.
The private medical, you get £100 if you do.
£100 for your child. Oh, it's an incentive, there you are. That's what Phil calls straight-through processing. Right. I'm sure you're not allowed to say that. It amazes me, actually, the number of people who sit there for sort of 5 and 10 years. Actually, we actually have, in terms of turnover, actually a very low level of turnover, which we have. But actually 10 years. Look at that. Jessie May came as being 10. She was 12! For God's sake, are you recruiting children? It is quite astonishing. I'm very proud to actually see so many people around, despite the fact I have to put up Chris Birch wearing brown suede shoes. For God's sake, it's nearly as unpleasant as Charles's tie. But to have the pleasure of working with these people for so long, it really is quite fantastic. And I don't know about you, in terms of companies you work with, having people that have been there for that length of time, I think it sort of reflects what's happening inside the business. Something else that I think is important as well, I just want to spend a bit of time talking about, and that is the work done by the Charity Committee, which is not me. And because they have done the most fantastic amount of work, and I know it's very easy to sit there and say, oh, well, that's what companies do. No, it's not. It's actually not what companies do. It's what the people in the companies actually do, in their own time, in their own effort. And just bear with me, and I'm not going to read everybody out, but actually, well, Julie Fitzpatrick, Kerry Gray, Lizzie Esner, Jennifer Lang, Sophie Turney, Abby O'Brien, Laurie Romankowski, I can't pronounce your name, sorry, and Carrie Stone, and more others have joined in, have done a fantastic job. Last year, £20,000. Yeah, okay, that's very impressive. You even managed to squeeze some money out of Charles for that. Actually, when you look at the amount of money that's actually got this year, let's see if we can put this one up here. And you can see this is where this has been going to, National Deaf Society, Deaf Children's Society, and grief support for children and young people in Oxfordshire. 27,110 is untrue, actually, because of the results of actually Joe being able to win the lottery today, to be able to get a day off again, remarkably. No brown envelopes switched hands. Actually, we've been able to make sure that is now over £28,000, which I think is actually very remarkable indeed. So fantastic, and thank you. Look, a round of applause for the Charity Committee. I know I'm normally rude about Chris Birch, but frankly we should. But the work he did in peddling around the country, it's what his entire life's been peddling around, but actually what he did for raising money for the desperate issues of the charity that Alex Scott nominated really was remarkable. Chris, that was a fantastic job, and Charles also for supporting that one as well. But then also, then as a result of the raffle money and everything raised for those two societies, I think that's a fantastic job. There's a lot more that's going to be done this coming year, and hopefully some more support we can try and provide for that. It depends on us all actually participating. And I think we've been very good at being able to really make sure this actually flies. So thank you all very much for all your efforts, and here's for next year as well, to try and have a go. Now, I think it's probably time we just move on to, actually we're not going to have the Greedy Awards, actually we're going to actually just have some questions. Tom. That's it. We'll all go back. I'll say that one.
Gave it away. Still in front of you. Right, I'm not the one asking the questions. We generally, for those of you who haven't been in one of these things before, we open up the floor to anybody who has questions. You've all had an email beforehand asking, are there any that you would like us to discuss in open forum? And The object of the exercise, sending the emails, is so that if it's something that you really want to know the answer to, but you don't really want it attributed to you, or you feel a little self-conscious about it, you can ask it in an anonymous fashion. And I've got a couple of those to answer right now. This is not to, so made reference before about not going into big company antics. So what we don't do here is we don't gloss over the difficult subjects. You know, we take them head on and we tell you the truth, and that's kind of what we always agreed that we would do. And one of the first questions that came up was redundancies. Are we going to have more redundancies? Are we going into a massive cost-cutting spiral? And the answer, broadly speaking, is no, we don't have any large redundancy program. We don't have a vicious cost-cutting program. You've seen what the numbers are. We're going to be pretty much flat next year versus this year. There is a mandate to make sure that we run the business efficiently. And over the last couple of years, we've gone from 230 to 200, from 200 to 230 to 280. We're now over 300 people. And the people that we've had to part company with, that we asked them to go, over the last 6 months were 5 people. Okay, so just order of magnitude. Let's get a little bit of context into that discussion. There will be, from time to time, another one, or 2, or 3. And that's just the nature of running a business. It's not the nice part of the business, but it's a fact of life. But if the nature of that question was, is there this big cost-cutting program and machetes are going to be flying around the room, and the heads are going to be locked off? No, that's not where we're heading. We have way too much value in the people in this room. You know, when I look around, I'm sitting up here looking out at the people in the audience, and I'm saying, oh my God, you got some really, really good people here. Really, really good people. So our job is to make sure that you know that, to know that you're valued, to know that your efforts are appreciated. And if there are 1 or 2 in our midst who are not pulling their weight, then we also have that responsibility to deal with that. So I hope that answers the kind of questions that were in your mind when you asked about redundancies. And if not, there's an open forum here, you can let it fly, or we can talk one-on-one. A related question, perhaps, was, are we looking at any more acquisitions? And I'll repeat what I've said on a number of occasions. By DNA, we are a business that grows organically. We looked, and we've said this before, at, I don't know, about 25 different businesses that were for sale. The only one that came close, and it came more than close, it was fabulous, was TCAM. But we have our strategy, we have our culture, we have our products and our services, we have the kind of people that we are very, very proud to work with. And if we find another one like that, yeah, maybe. Caledonia, our shareholder, has cash. They would like to give us more money to spend, and basically we tell them, don't. You know? So I won't say never, but I will say it's not high on the agenda. What's high on the agenda is to fulfill the strategy that we laid out already. There was another question. No. Why don't I take, anybody got any question about anything that they would like discussed? This is genuine when people look at their watch list and I want to go have a drink. Anything from anybody? There were a couple of questions that came in that were sort of HR rules related, and what I'll do is we'll turn those over to Kate. We'll let Kate deal with those one-on-one fashion. But what I'm looking for here is there something which is strategically important to the business, something which is fundamental to the way the business is going to develop over the next 5 years, that anybody wants to know? Right. We need this.
Okay, right. Right, okay. Many of you won't know what the Guidi Awards are, and to explain, our colleague here, Jordan Gillis, is going to explain exactly what they are and take you through, see if there's actually a winner this time.
Thank you. So you see my best joke was ruined. Yeah, I know, it's changed everything. So there's lots of new faces here, so you're all probably wondering what the hell the Guidi Award is and who's this idiot standing before you presenting. Well, that's exactly what the Guidi Award is for. It's for an idiot or doing something incredibly embarrassing, basically. So I won it a while ago now because rather than texting a client asking them to shift a meeting around, I asked them to shit it around, which was great. Now, it was born many years ago when Simone was sort of in a rush. He was meeting everyone at the airport. He was really, really late, texting saying he was going to be there. He arrived at Heathrow, called them, asking where they all were, and they were, of course, all at Gatwick. And we had the Guidi Award named after Simone, and it was born. Now, I actually should not be standing here in front of you because at the summer party I handed over the awards to Mr. Gary Ware for possibly the most legendary Guidi Award of all time. And Gary was at my desk genuinely this morning begging us not to recap this award, and he was so embarrassed to have to briefly do it that I'm now stood here again. So to make sure, what I've done is, just in case you don't know who Gary is, let's bring it up. Oh, hang on. Let's go back one. Sorry. There, Gary's on the left there, and as you can see, he pulls out any sales methods possible with IFAs to get him to buy his stuff. And because he's coming up here, I've gone and dug it out, and I'm going to read it out to you again in full detail as well, just to remind everybody, and all the new people that didn't hear it, they can hear it again. So here it was. So Gary was in a sales meeting, and he was seated at the opposite end of the meeting room to the door. He got up mid-meeting, probably to go to the loo, and started to head to the door. As he reached the end of the table and was right behind Robert Hardy, who's of course head of intermediary BD and Gary's boss, he had the most unfortunate accident and let out simply an astronomical fart. Everyone looked around, what the hell's just gone on there? Apparently he went extremely red, started to panic and blame everyone that was near him. As everyone fell about the floor laughing, he realised he was making a fool of himself, started to backtrack, and then decided that his best option was just to run out. There was kind of a debate whether he was going to come back, and a few minutes later he did return. Sheepishly appeared to apologise to everyone and asked the whole team to keep the incident completely under wraps. So, here I am, announcing it for the second time. Gary's known as Gary Tear now, Gary is the underwear. Anyway, this year's nominations, we're quite light on the ground this year, but the nominations are. So we have an egg incident. So this made this person made an unfortunate decision to use a microwave in the staff kitchen to boil an egg, as you do. And upon taking it back to his desk, began to crack the egg open. And as he started to hack the egg, the thing just exploded with a sonic boom, hit Marvin, probably waking him up. I actually did a bit of research into this to give you an idea of how loud these things are, and there's actually been scientific studies into microwaving eggs. And an egg exploding has been recorded at a noise of 133 decibels, which is louder than most rock concerts. So that is our very own Mr. Joshua Catchpole. So good work there, Joshua. Maybe some cooking lessons coming your way down the line. The next one I quite like as well. I don't know if I need to click now. Yes. Okay, so this one, right, so it came to light that, this is brilliant, you may have heard a lot about our retirement income service, you know, it's a double award-winning service, you know, it's big, and it came to light that one of our most experienced BDMs in the company was using some rather unusual marketing material to sell our retirement income service to IFAs. He's not the most technically astute man, if you know him, and rather than using some of the amazing branded marketing packs, I mean, Jane's gonna kill him, he instead opted to use these drawings for his sales aid for IFAs, and I understand he was pulling them out regularly as well, so this is what he was using for his sales aid. And I believe presented them to the team as an explanation, and they couldn't quite believe it, so Mr. Coverdale, you know, he's not just a man of the town. So, what we have to do now is we have to vote for our favourite, and then, Gary, have you got the award with you, by any chance? Gary, do you want to come up? Can I please ask everyone, can I for our egg incident for Josh Catchpole, can I have a round of applause please for the egg incident? That's pretty good. Okay, Mr. Coverdale for his, well, interesting sales pitch. The egg on the face has it. So, Josh, congratulations. You are 2018's Weedy Award winners. Please come up and collect your awards. Don't forget the acceptance speech as well. Thanks.
This is not what Marvin said when he had the egg all over him. Right, that's it. Look, we've all worked really hard this year. Thank you for everything that you've all done. Here's to next year. Having worked very hard, let's hope we have a bloody good party. Bye.